back. Here's a look at when markets ended the holiday-shortened week after we did get better-than-expected jobs numbers for the month of June, shattering expectations. 147,000 jobs were added to the economy in the month of June versus an expectation of 110,000. The unemployment rate declined to 4.1%, also lower than expectations. Joining me now from the White House with more on the impact of all of this on the economy and your money is U.S. Council of Economic Advisors Chairman Stephen Miran. Stephen, great to have you. Thanks so much for being here. How would you assess the economy today?
Hi, thanks for having me. Look, the economy today is healthy. Job creation is healthy. Inflation is controlled. People are happy about where things are. The president created 147,000 jobs in June. He's now beat on Jobs Day in four consecutive months, the last 4 months. He got a better number than 78 out of 79 economists in the Bloomberg survey predicted. So the experts were all wrong again. They were all too pessimistic on the president's policies again. And things are moving quite decently. And the one big beautiful bill is only going to unlock even better growth. The tax incentives for investment, the full expensing, the incentives for more work from no tax and overtime, no tax and tips, these are going to be hugely important in stimulating the supply side of the economy. And we think that altogether these things are going to get economic growth to the point where it's going to boost GDP by 4 to 5% over the course of the president's term, and it's going to increase after-tax take-home pay for a typical family of 4 by about $10,000. So these are very material increases that we expect to happen in the economy.
Now, another big win was President Trump announcing a major trade deal with Vietnam, saying that it includes a 20% tariff on all Vietnamese goods coming into America, 40% on goods that pass through Vietnam from another country. Of course, we already have a deal with the UK, but in this Vietnam deal, the U.S. doesn't have face any tariffs for our goods going into Vietnam. What's your assessment of the trade deals? All of this ahead of the July 9th deadline next week. President Trump put in a deadline for a pause in the reciprocal tariffs. That deadline is expiring next week. How significant is that, do you think?
Look, I think that this trade deal is monumental. The president has proven once again that he's one of the best negotiators in history, and that decades of negotiating deals across everything from real estate investments to international trade have paid off, because this is a fantastic trade deal. It's highly favorable to the U.S. and it sets into the pattern of great trade deals the president has made. Now, the July 9th deadline, I expect, I'm optimistic that we're going to get a number of additional deals going into the July 9th deadline, because the structure of how these talks have worked in terms of the steps that different countries have gone through the negotiating process. The president has got it to a point where countries are lining up to make concessions, just like Vietnam did, to maintain access to American markets, to continue to have the privilege of trading with the United States, right? It's not a right, it's a privilege. And the president knows how to get the best price for it. And so the Vietnam deal is great, and I'm expecting more to come.
Yeah, I mean, Scott Bessent, the Treasury Secretary, told me that he's expecting a flurry of deals to be announced just in the next couple of days.
I would warn any of these countries that think that they can drag this out to be careful, because they could cantilever back up to the April 2nd reciprocal tariff rate. I would expect that we will see a flurry of deals announced over the next few days.
And we know that just recently, President Trump stopped all talks with Canada because Canada had a digital services tax that they were charging American companies. And what did they do this week? They rescinded that tax. So the president will resume those talks with Canada as well.
Oh, yeah. And look, the president has shown that he knows how to apply pressure to get what we need in these trade talks and to stand up for America. And he did this in the past with Europe, too. When there was an impasse in the talks with Europe, the president put out a truth saying that he was going to do 50% tariffs on Europe. And immediately the Europeans called and the impasse was resolved and the talks started making progress again. And that was huge. And now he did the same thing with Canada. He said he was going to raise massive tariffs in Canada, and the impasse was resolved. And the digital services taxes were gone, as you point out. The president knows how to apply pressure to move things forward for America.
Now, let's talk about the Fed and how that fits in here, because Fed Chief Jay Powell admitting that if it weren't for tariffs, he would have cut rates by now. The president told Powell he's costing the United States a fortune. Federal mortgage regulator Bill Pulte told me that Powell either needs to cut rates or resign. He's now calling on Congress to investigate Powell's, quote, political bias and deceptive testimony to the Senate about an upgrade that he put in place for the Federal Reserve. What's your take on that?
Yeah, I mean, look, I don't tell the Fed what to do on interest rates. That's not what the Council of Economic Advisors does. But $2.5 billion for a headquarters does seem a little bit excessive. I don't know that that's the best use of taxpayer money. But I do think when you look at the economy, the economy is showing signs of good, healthy growth. And critically, inflation has normalized. CPI inflation has been running 1.5% since the president took office on an annualized basis. That's actually a quite modest number, and it's a bit below where the Fed says it's comfortable with things. So I think there's not really any material sign of inflation. There's not really any cause for any serious concern. There's no evidence at all that tariffs are translating into higher prices, into higher inflation rates in any economically significant way. And not only is there no evidence now, but we already ran this experiment in 2018, 2019 with the president's historic tariffs on China during his first term. And just to bring this back to taxes for a second, what we did in the first term was raise revenue by tariffs on China, and we use that revenue to finance, in part, the Tax Cuts and Jobs Act and keep tax rates on American families and American businesses low. And that's exactly what's happening again now. We're taking this revenue from tariffs. It helps to pay for lower taxes in American businesses and American families. And that just sounds like such common sense policy to me. It's amazing nobody thought of it till Donald Trump.
All right, we will leave it there. Stephen, great to get your take on all of this. We so appreciate it. Thank you.